if you have a temperament that when others are fearful, you're going to get scared yourself, you are not going to make a lot of money in securities over time in all probability.
Hi again, everyone, and welcome to this video on long-term investing, Buffett style. Today, we'll be taking a closer look at the investment philosophy of Warren Buffett, the Oracle of Omaha, and how it applies to the current market situation in 2023. We'll also be discussing why a falling market can be an opportunity for long-term investors and how to be a successful long-term investor. Of course, it is worth pointing out that long-term value investing is just one approach to investing and may not meet the goals of every investor out there, but hey, each to their own. So let's get into it. First, let's talk about Warren Buffett's investment philosophy. As the CEO of Berkshire Hathaway, one of the largest companies in the world, Buffett has a long-term investment approach that focuses on value investing. He looks for companies that are undervalued and have strong fundamentals and holds on to them for the long term. His track record of success speaks for itself. From 1965 to now, he's actually averaged 20.1% returns per year, while the S&P 500 has only averaged 10.5%, so he's obviously doing something right. Now, let's talk about the current market situation. The market, until this week, has been falling. Inflation is high and interest rates are on the rise. For many investors, this can be a cause of concern. However, for long-term investors like Warren Buffett, a falling market is actually a good thing. It allows them to buy stocks at a lower price. In fact, some of Buffett's most successful investments have been made during market downturns. The key to being a successful long-term investor is to have a rational approach to investing. Emotions can cloud judgment and lead to poor decision-making. Investors who make decisions based on emotions are more likely to make mistakes. It's important to remember that the stock market is cyclical and there will always be ups and downs. But on the other hand, short-term investing can be risky. You may miss out on long-term growth opportunities and be susceptible to market fluctuations. A long-term investment approach allows you to ride out the market's ups and downs and focus on the long-term growth potential of the companies you're invested in. So how can you be a successful long-term investor in 2023? Here are a few tips. 1. Diversify your portfolio. Spread your investments across different sectors and industries to reduce risk. 2. Conduct thorough research. Understand the companies you're investing in and their fundamentals. 3. Don't be swayed by short-term market fluctuations. Stick to your long-term investment plan and don't let short-term market movements affect your decisions. So, in conclusion, Warren Buffett's investment philosophy and approach to investing is a great example for long-term investors to follow. A falling market can be an opportunity to buy stocks at a lower price, and a rational approach to investing is crucial for success. Remember to diversify your portfolio, conduct thorough research, and stick to your long-term investment plan. If you try to undertake value investing or have another approach to what you do, let me know in the comments below. Until next time, everyone, thanks for watching and may the markets trade in your favor. Cheers.
Temperament that when others are fearful, you're going to get scared yourself. You are not going to make a lot of money in securities over time in all probability. People really, if they didn't look at quotations, but of course the whole world is urging them to look at quotations and more than that do something based on small changes in quotations. But if you didn't think how much more rational, we've talked about it before, but think how much more rational investing in a farm is than the way many people buy stocks. If you buy a farm, do you get a quote next week? Do you get a quote next month? If you buy an apartment house, do you get a quote next week or month? No, you look at the apartment house or the farm and you say, I expected it to produce so many bushels of soybeans and corn, and if it does that, it meets my expectations. But they buy a stock and they think if it goes up, it's wonderful, and if it goes down, it's bad. We think just the opposite. When it goes down, we love it because we'll buy more, and if it goes up, it kills us to buy more.